How many different sources of income are you, your friends, and family aware of? How many different sources of income do you have now? Rich people, unlike many members of the working class, do not rely solely on one source of income. They don't limit their revenue production to merely working 9 to 5, exchanging their time for money for days on end. In fact, the average billionaire earns money from 7 different sources. How can wealthy people make money in 7 or more ways? Earned income is how most people make their money, but there are numerous additional ways to generate revenue. There is a lot more to making money than most people realize. To achieve financial independence, you must have money work for you rather than you working for money. Welcome to Cashflow Canvas, where we teach lessons about investment and money-saving techniques. If you want to make your financial future better, make sure to like this video and subscribe to our channel for the latest updates. Earned money is by far the most frequent sort of income, and it is the type that everyone is familiar with. Earned income is income obtained via work, such as a job for a paycheck. This is when you are paid according to the amount of work you complete. Many workers are paid on an hourly basis, and their pay is directly proportional to the amount of time they spend working for someone else. It can also be when an individual is self-employed and is paid hourly, per assignment, or on a commission basis. In all of these cases, the money must be earned before it can be paid, and it stops pouring in as soon as the work stops. Earned income is often taxed at a higher rate because there are fewer tax deductions available. Many of us have heard the phrase "just over broke" when it comes to work. People are sometimes unable to recognize opportunities outside of their working income because they believe the misconception that a job is stable and secure. It helps you to remain in your comfort zone with minimal danger. While it is not something to argue with, the risk is in relying exclusively on one income source and failing to diversify into other sources of income. The actual risk of having a single source of income, generally from an employer, is quite serious. Profit income is money earned by selling something for more than it costs to manufacture or buy. A grocery business earns money from profit when it sells things for more than the cost of purchasing. A car dealer makes money by selling cars for more than they pay for them and profiting from the loans and maintenance services they provide. Earning this form of income demands a significant amount of effort to begin with, as it often necessitates the establishment of a business. However, you do not have to construct the next Walmart or Amazon to make money this way. A salesman might go door to door selling a cleaning product for more than he paid for it, requiring very little beginning and overhead. People who work for earned income generally have a tough time acquiring this type of income since it demands a certain amount of bravery in terms of spent time and capital to begin. It may also necessitate an inconvenient length of time away from the earned income job. To start a new business, to be an entrepreneur, and to make money, you must first choose a product or service to sell, perhaps something that is personal to you. This might be anything from vehicles to clothing to launching a business. Profitable revenue can be financially very rewarding if you display the goods correctly and treat your consumers well. It is as simple as lending your money to someone for a fee to generate interest revenue. The interest earned by lending is determined by how long the money is lent for and what it is used for. For example, if you lend money to an investor who plans to flip a house in a short period of time, the interest rate will be significantly higher than if you lend it to buy a rental property that would be held for a long period of time. Rental properties are typically owned for a lengthy period of time, often years, but buying homes to fix up and sell occurs rapidly. Although the total amount of interest collected may be comparable, the terms may be substantially different. Giving your money to someone who wants to start their own business, giving it to someone who wants to purchase a new automobile, or just placing the money in a bank account or lending it to the government in the form of treasury bills can all result in interest income. A payday loan company makes money by lending to clients with the understanding that the borrower would repay the loan when they receive their next paycheck. This is one type of income that, once established, can be fully passive, needing no effort other than the initial investment. The amount you can make, however, is restricted to the amount available to lend and the amount the borrower considers reasonable to pay in interest charges. Dividend income refers to payments received by shareholders just for owning a dividend-paying stock, such as 3M, Coca-Cola, Walmart, or Johnson & Johnson. If you own the S&P 500 index, for example, you will get around 2% of your holding value in dividend payments, which are normally paid out quarterly. Individuals with a significant amount invested can frequently attain financial independence by living only on dividend payments, allowing the rich to get richer. To put it another way, the principal of the investments grows while the investors receive some cash flow. Many retirees opt to live on dividend income if they have enough invested to cover their monthly expenditures. Consider dividend income to be cash flow from a rental property with the ability to appreciate while still producing cash flow. Rental revenue is typically earned by renting out property. Typically, tenants rent houses or flats in exchange for a monthly fee, but real estate can also include industrial facilities, warehouses, storage trailers, and even land. Retail spaces in shopping malls are most commonly rented on a monthly basis. Many of those retail stores opt to rent space rather than purchase and maintain their premises, allowing them to focus on their products and services rather than maintenance, repairs, extra bookkeeping, and other property management responsibilities. Rental income can be generated by a wide range of assets, not just single-family homes and apartment buildings, as is usually assumed. People hire boats, campsites, automobiles, tools, and the list goes on and on. Almost any form of real estate can be used to generate this type of income. To earn a profit from rental income, the money collected must cover the expenses of the property or item and hopefully leave some money over, which is referred to as cash flow. Capital gains income is earned when you sell an asset that has appreciated in value. A home that has appreciated in value, a stock that has improved in value, or an antique car purchased for $10,000 and sold for $20,000 are all examples of this. Capital gains income is most often obtained from stocks or real estate, although there are numerous other ways to generate money in this manner. Unlike other sources of income, however, the gains can only be realized when the object is sold for a profit. For example, if you possess a stock that has doubled in value, the only way to get the money is to sell it. The amount one might possibly make from capital gains is limited by the number of assets one can buy and sell, which limits passivity. Royalty revenue is money earned in exchange for intellectual property. Most typically, this is in the form of copyrighted material, such as a psalm or a book. But there are other sorts, such as artwork in the form of logos, drawings, slogans, or patents. Once developed, this form of income can provide a passive income stream for the original artist or vendor for as long as the material is legally protected. If you own intellectual property and wish to earn royalties from it, you have two options. You can sell the property and get payments from the buyer based on a proportion of the revenue generated by the product. For example, you can sell the copyright to a book outright and collect upfront royalties as well as a continual stream of cash depending on book sales. Second, you may retain ownership of the property and get royalties from someone for its usage. This is known as licensing royalties, and payment amounts can be determined in a variety of ways. These can be established as a fixed or variable percentage of gross sales in a franchise setting, like as a fast food restaurant. There is frequently a minimal royalty. Royalties are another excellent source of income for anyone who creates a product or service and profits from intellectual property. If you want to make more money, you must not limit yourself to only earned income. Adding new income sources to your life will allow you to begin earning passive income while you sleep, progressively reducing the number of hours spent working a job and being trapped in the rat race, trading time for money. There are only so many hours in the day that can be spent working for a living, so start earning money the way the wealthy do by taking advantage of these alternative income opportunities. As we conclude, I'd like to thank you for watching. I hope you found value in this video and learned something new, and I look forward to seeing you in our future videos. I would deeply value it if you could like this video and subscribe to our channel. Your support will help us to create more valuable content and we can work together to secure your financial future. What are the key takeaways from this video that you can share in the comment section?